So good morning and welcome to the first panel of the third BlueStar Israel Summit. My name is Tzlill Keren-Blum and I'm BlueStar Index EMEA representative. I come from Israel and I'm thrilled to be moderating the panel, Israel's Capital Markets Renaissance. First, I would like to introduce the members of the panel. Alon, Ozer, Chief Investment Officer of Greater Miami Jewish Federation. Reinin, Director of Investor Relations for the Israeli Finance Ministry here in New York. Fink from Hayden, Investor Relations. And Shay, Zafran, Chief of Strategic Transformation of IDB Bank of New York. Thank you all for joining us. Israel is about to celebrate 70 years, a young country with unique characteristics. On one end, Israel has a lack of natural resources, such as land and water. On the other hand, a mix of people who came from all around the world with one mission, to build the Jewish state. The result is an innovative environment which became known as startup nation. For example, Israel was in its early years mostly an agriculture-based economy, but we didn't have sufficient amount of water. So we developed a solution that will help reduce the waste of water in order to sustain the agriculture sector. I guess you all heard of Netafim, which was sold this year to Mexican for $1.5 billion. This is what Israelis are good at, taking a disadvantage and transforming it into an advantage. Israel is one of the fastest growing economies in the world. Israel is expected to be the second fastest growing developed market in 2018. There are a few key drivers of growth for the Israeli economy: strong fiscal discipline, attractive demographic trends, offshore natural gas discovery, and of course, the most known one, the innovative high-tech sector, on which we will hear later today. So the overall figures of the Israeli economy are superb, and the outlook is positive. So how is that reflected in the global capital markets? If we will look at global equity indexes, Israel is a tiny fraction of the global equity indexes. In the EMEA IFA index, Israel is only 0.4%, while other economies, which have a similar GDP size, such as Hong Kong and Singapore, have a much higher percentage, 3.5 and 1.3 accordingly. We will get the same result if we will look at the US ETF market. The Hong Kong ETF's AUM is $1.9 billion. The Singapore's ETF AUM is $621 million, while the three Israeli New York Stock Exchange-listed ETFs are only $158 million. The situation I just described is starting to change. In the last year, there were a few transactions in which Israeli companies were involved. These transactions drew the attention of global investors to the Israeli companies, regardless of their listing venue. Adding to that, Citi's announcement on the inclusion of the Israeli governmental bonds in its extended World Government Bond Index, the government of Israel had started to understand what BlueStar had been saying for years. Both local and global institutional investors are under-allocating Israeli equities. This irrational behavior is changing. The government of Israel has supported an initiative that will enable private and institutional investors to invest in the technology sector more easily. We will explore the meaning of such products and its effect on local and global investment in the Israeli high-tech companies. Israel ETF industry is ranked 10th in the world. Will the ETF market continue to grow, and even will grow faster once regulations and market structure in Israel change to align with global standards? On all this and more, we will soon hear from our members of the panel. So, with great optimism for Israel equity market potential in the coming years, let's touch on a current Israeli success story: the government's superb management of the economy, and as part of it, its ability to successfully raise capital at home and abroad. Steadily reducing debt to GDP ratio from 62% in 2015 to 60% in 2016, fiscal discipline with the budget, which results in surplus high-class program. In 2017, it will be less than 3% of GDP. So, Jason, the government of Israel has come a long way with regards to their bond issuance in the global debt capital markets. How have things developed, and how does this help the private sector and the companies within Israel?
Sure. Everyone can hear me okay? Yeah? All right, excellent. Yeah, we've certainly come a long way with our global debt issuances. In fact, Israel really only joined the debt capital markets in about the mid-90s. Before that, from 1951 and still through today, We utilize a retail bond program, which you guys all know and love as our Israel bonds. And those are non-tradable, issued directly to the investor, a low denomination, really marketed towards the Jewish diaspora. So in the mid-1990s, the state of Israel wanted to start issuing tradable debt in the capital markets to big institutions to diversify our funding needs. So we began doing it in lower amounts, less than $1 billion of issuance, and we utilized a US aid program. So what this meant was that if Israel, for whatever reason, was not able to pay its debts, which following the tumultuous 1980s wasn't such a crazy idea, the US government would step in and then pay for it. And so this brought a lot of confidence for institutional investors and helped us to really access the capital markets. And so for about 10 years or so, we utilized that system. We still have about $4 billion left, should we choose to use it, but we saved that for real dire straits. So starting in 2005, our institutions were shown to be very, very strong. Our economy, some of the numbers that you mentioned, our economy strengthened, and we had never missed on any kind of payment. And so it was clear to the international community that we could then issue upon our own credit. And so since 2005, we've been issuing solely on our own credit, larger amounts between $1.5 to almost $3 billion a year, both in euro and USD. And we have a well-diversified and very high-quality institutional investor base. And so what this all means for the private sector is now that we've become a dependable, become a consistent issuer in these markets, we've created benchmarks, we've created curves. So if you're a company within Israel and you want to raise capital without diluting your equity by issuing more stocks, you can now access the international debt markets as well and get a very efficient price for your bonds using us as the curve. So we've really, I think, opened the door for a very important and useful tool for Israeli companies to use.
Okay, thank you. So we see that there is a great potential for investment by global investors because of the inclusion in the WIGB, and that Israeli government is preparing well in advance for it. Oh, sorry. As a reward for the effort, on March City announced that Israel governmental bonds will be added to the WIGB extended, which means that the global investors all around the world will have to buy Israeli governmental bonds in order to track the WIGB extended. Jason, how is the Ministry of Finances preparing for the inclusion, and how do you think it will affect investments in Israel in general, not only through governmental bonds?
Sure. So the State of Israel Ministry of Finance hasn't done anything specifically different or out of the ordinary to prepare for the inclusion upon the WIGB extended index. The way that it works is the index calls you and says, you've met A, B, and C metrics, and now you've passed whatever D is, so we're going to include you on the index. So the reason that we weren't already on this index, and one of the reasons we're not on some of the other indexes, it's not because we're not sophisticated enough or rule of law or we don't have transparency or anything like that. It's simply because we don't borrow enough. We don't take on a big enough debt burden. We don't issue enough bonds to hit these thresholds. So for the WIGB extended, we did pass that threshold, and so that we're being included. But we're going to make up a very, very, very small part of that index. So we're not going to see any effects of an overnight, billions and billions of dollars coming into our bonds. But what we will see, or we expect to see, is that now that all these investment houses who maybe haven't looked at Israel before, they're going to have to read our prospectus, they're going to have to read our annual reports, they're going to have to learn about the economy. And when they dig a little bit deeper and they see Israel, for instance, has GDP per capita the same as Japan, the fact that there's only 3 countries in the OECD that lowered their debt in the last 10 years as a percentage of GDP, Norway, which is a AAA country, Israel, and Switzerland, AAA country. All of a sudden it becomes very interesting. The minister mentioned 300 multinational companies are setting up shop in Israel. Forget about security concerns and all that. They're thriving and doing pretty well. So there's something going on in this single A country out in the Middle East. Maybe we should look at it a little bit deeper. So if I'm an investor and I'm tracking this index, now I'm starting to look at Israel. Maybe I'm limited to what I can buy in the sovereign debt, but maybe the domestic shekel-denominated market starts looking interesting. And there's certainly unlimited possibilities when you look at the real economy and the real sector. So just as a quick aside, In 2010, Israel joined the OECD. We moved from emerging market to developed market classification. We didn't see some $1 trillion come in overnight, but certainly over the past 7 years, we've seen a lot of positive impacts coming in through foreign direct investment, through trade, and things like this. So we may not see something in December when we join this index, but we do expect to see, the more people that are looking at Israel, the better it is, of course. We have such a great story.
So as you all know, BlueStar is a global technology index, also known as TA BigTech, that includes all the Israeli stocks in the technology sector, regardless of where they are registered for trade. We in BlueStar see in numbers the growing interest in the Israeli high-tech companies. During the last year, the product tracking the TA BigTech, both in the US and in Israel, grew from $8 million to a total AUM of $95 million. The Israeli government is finally starting to realize the great value of investing in the Israeli high-tech companies. The most recent initiative of the Minister of Finance and the ISA is to launch 4 mutual funds who will invest in high-tech companies. These funds will be allowed to invest up to 30% from their portfolio in startup companies, and the rest of the portfolio will be public high-tech companies. Of course, we at BlueStar think that the TA BigTech is the natural choice for such a mutual fund. In order to minimize the risk of the unit holders, the government will provide guarantee for up to 50 million shekels per fund, plus the ability to raise capital by using guarantee of up to 100 million shekels per fund, which will enable the fund to leverage the money of the unit holders and to enlarge the potential return. Shay, I would like to hear from your perspective on the potential appeal of such products for your clients in the US.
Yeah. Hi. Good morning, everyone, and thanks for having me. Steven, thank you again. Just to emphasize some about what Jason said, since in my last position I was at the Ministry of Finance working with Jason, I think it's very important, first, everybody likes to be in a club, right? Well, now we were the OECD club, now it's another global bond index that we are a part of. And I think it's very important what Jason said about when an investor wants to invest in a country. If I was telling you, Tzlill, to invest in Zimbabwe, some company from Zimbabwe, right? So I don't know Zimbabwe, I don't know everything about it, so definitely, maybe it's a great company, but I won't invest in it, since it's really Zimbabwe? By the way, I know a good company in Zimbabwe if you want to invest in.
Okay, tell me later.
Yeah, no, I don't. So I'm saying, but after you do a due diligence of a country, so now you have to track the GDP, you have to track the CPI, the inflation, everything related to the country, the geopolitical risk and everything around it. Now it becomes easier for you to invest in some other company because you've done a lot of the work around it, right? So that's very important. And I think it's a big deal for the Israeli capital markets. I do agree with Jason, it's not gonna bring tons of money and billions of dollars. It can bring some billions of dollars. I don't know if 2, 3, 4, 5. We can try to measure it, taking the less than 0.5% that we're gonna be part of the index, and then try to estimate the inflow to Israel capital market. This is on this end. Of what you mentioned about the Israeli high-tech mutual funds, this is another initiative of the Israeli government. I think that becomes more relevant to international investors, also to our investors, but generally to international investors. I think it was the tender, the bid was closed in October, if I remember correctly, right?
Correct.
4 or 5 different...
5 companies.
5 of mutual funds, yeah. So that can generate a lot of inflows again to the high-tech scene. I think that in Israel, we are lacking money from institutional investors investing in the high-tech industry in Israel. So we have an excess amount of money, between $2 to $3 billion a month of new deposit and new money, net money, that comes into every month into insurance companies, into pension funds, provident funds, a lot of institutional investors in Israel. And as for now, they don't invest a lot of money in VCs, they don't invest a lot of money in startups, in everything related to seed money or others. Now with the government guarantee, I think up to 50 million shekels.
Yeah.
And again, as you mentioned, 100 million shekels that they can leverage and take as a credit guaranteed by the government. I think maybe in some cases it can go up to 200 million shekels. So that can help the institutional investors and international investor to be exposed to the Israeli high-tech scene. Probably Steven can use it also to leverage BlueStar indexes, but that's a very good step or very good, it's not a reform, but initiative of the government to invest in the Israeli high-tech, which is already probably second only to the Silicon Valley. So,
Alon, as an institutional investor, is this the kind of product that you will invest, or do you prefer more plain vanilla, less risky product to invest in the Israeli technology sector, such as the high-tech ETF?
So I'm not that optimistic about these products. We do invest in high-tech because we found that this is the best way for us to access public high-tech Israeli companies. We don't take a lot of risk. In some portions of the portfolio, we take a lot of risk. We invest in VCs, we do private equity, we do some hedge funds. That's our objective is to grow the fund and have better distributions to our agencies. Regarding the new products, it's hard for me to, and hopefully I'll be proven wrong. It's hard for me to see how something like this is gonna get traction. We already have VCs, that's their specialty, and they still don't have very good results over the years. So to let a mutual fund manage startups, I don't think it's gonna work. It's gonna be also very difficult for the investors and the startups, because what they're gonna do is they're gonna have a closed-end fund where you can trade the shares on a daily basis. With less liquid assets in that product, I think there's gonna be a big dispersion between the NAV and the actual value, which is terrible for companies, because let's say you're going to raise money. You're sitting down with this great investor that want to put money in your startup, and you talking about a valuation of $100 million, but he tells you, yeah, but based on that certificate, you're worth only 30, which is not true, because this is being manipulated, or there's just not enough liquidity, or for other reasons. That's going to be very hard for these companies. So I don't see who would want to do that. The other thing is, the fund is not big enough. If you want to build, when we build a portfolio of startups, we invest in a lot of startups, diversifying between industries, between vintage. You can't do it with only 30% of the portfolio, because the portfolio is going to be very concentrated, and you'll have to go, if there's not enough money, you will have to go into very early stages of these companies, which is
higher risk.
That's significantly higher risk. And when you give it to individuals to buy it, you might have serious issues there.
Yeah, Shay.
Yeah, I have a comment to make. First, I want to be more friendly to us. I'm just kidding. I 100% agree with you, right? This is not something that is going to be easy for the local industry. But I think of it as a tradable VC, right? Now, what we call in Israel, Mrs. Cohen from Hedera, like the simple whatever civilian that want to invest, for instance, in a startup. Now they cannot be exposed to that. And also think about the Israeli institutional. When there is an institutional money that they manage for their clients, now it's a tradable. Because in VC, usually when you go in, you're stuck. You're stuck for a few years, you're stuck for whatever. Now it's a tradable fund. It's exposed to not only, by the way, some of the money will be invested in the free market, right? In the capital market, in regular. But some of it will be invested, I think, at least 30% in the Israeli high-tech. So you are exposed to Israeli high-tech. It's tradable. You can trade it like ongoing, like every day. And then, if you don't wanna, if you don't wanna stay, if you don't wanna leave your money, just sell the VC, right? So this is kind of tradable VC, let's call it. So I think if you look at it in that perspective, instead of like investing in VC and continue investing in other VCs, so it's another VC, interesting one that can invest in the Israel. You have a guarantee. The government is guaranteed, give the guarantees of like up to 50 million shekels loss, which is nice, also nice to have. So I think it's not that a bad idea, but I agree with you, it's not that easy, and we have to maybe, the Israeli government, the Ministry of Finance has to do some more in order to promote it. I think it has a potential. And about in terms of size, the minimum size, like 400 million shekels, it's not the maximum size, right? It's only the minimum. It can go up to whatever, billions, hopefully maybe more. That's it.
Okay. That's it? Okay.
But I'm optimistic by nature. So.
But no, trading for the majority of my career, it's very challenging. It's going to be very hard.
Okay.
It
The
is
price
challenging.
discovery is not there.
Challenging. It is challenging.
I suggest that we will meet next year and we'll see.
No,
What
and
was the outcome?
by the way, regarding the compliments, we got to the point where 15% of our portfolio is invested in Israel. I don't know anybody else that does that.
Wow.
Right.
Yeah,
We are a big supporter.
I'm kidding.
right. So Rob, from companies' perspective, do you think that this initiative will help companies that you represent to attract more global investments?
So I'm going to look at this from a little different lens and from my work in helping public companies and Israeli public companies specifically interact with U.S. investors. And I think the impact that passive investing has had on all companies over the past few years as dollars have shifted from active managers to passive managers has had an incremental impact on Israeli companies. Some domestic companies have benefited from the rise of passive investing. For Israeli companies who are already under indexed, under covered by the sell side in the US and lack institutional support, anything that could be done to bring dollars into those companies from Israel and from abroad is helpful. I think the government program, at least from the public equity side, it can have a positive impact. Obviously, we're all here today because of the work BlueStar is doing to help solve these challenges. And I think programs like this that put more dollars into public companies, regardless of where they're listed, that have ties to Israel is really positive for these companies.
So Israel is ranked 10th in the ETP market. In Israel, there are two types of index products, index fund and ETN. On April 1st, the regulation of the ETN will change, and the ETN will become ETF like you know it in the USA. The reason for the regulatory change is that the ISA wanted to eliminate the issuer risk and to provide more transparency. But what is really important is that the greater competition in the new ETF marketplace will create an imperative for asset manager innovation. It is in this environment that BlueStar plans to bring global best practices of index design to growing Israeli market, which will mean more choices and lower costs for investors. Jason, how important is it for the Israeli capital market to be aligned with the global standards of other capital markets around the world?
Sure. Obviously, it's very important that you be standardized. If you're an investor in one country, it's important that the country that you want to invest in has the same understanding of terms and even of terminology. It means the same thing for you to invest in. I'll give you an example, just obviously from my side, from the government, from the debt issuance side. We file with the SEC every single year. We let them know what we're up to. We make sure that all the ISA, which is Israel's version of the SEC, all the banks are kept up to all the Basel commitments and everything like this. So we're universal with everybody else. When we do issue our bonds, we do it on international exchanges, the Luxembourg Exchange, the London Stock Exchange, and right here in the New York Stock Exchange, our 2019s are listed. So being standardized with everybody else is very important. And just as one sort of additional thing, we try in international arenas really to promote our thought leadership in areas where we're a little bit more developed, in areas like risk management. So we've presented just in the past couple of years with the OECD, with the World Bank, some of our financial models. So for us, it's not necessarily just about standardizing with everybody else, but if we can, lifting those standards a little bit, playing our part. And I think that the rising tide lifts all the boats.
So Alon, do you think that this reform will help Israel capital market attract global investors to invest in Israel in general and perhaps specifically in the Israeli ETFs?
Yes, 100%. 100%. One of the reasons that we didn't invest initially and we waited for BlueStar to launch an ETF was that reason, because we couldn't go into, I'm taking the equity risk, I have somewhere else the credit risk, I don't need to take it at the same So it's definitely a big move.
Shay, I see you're nodding. You want
No,
to
no,
add
yeah,
something?
I totally agree, because as for now in Israel, we have only the mutual funds in Israel, and we have like kind of, it's not an ETF, it's a mutual fund that track indexes, so it's not a tradable, right? So you can trade it only once a day, I think, right?
Yeah.
Like once a day in the mutual funds in Israel. By 2 o'clock or something, you can buy or sell. So now you won't bury the credit risk, as Alon said. I think it's very important, because the ETNs, like kind of a bond, like a security note to track that obligate to track it, but doesn't necessarily hold the underlying security. And they're making money by shorting whatever. It's another lending security that I won't go in, but I know that you are familiar with it. So I think it's, as Jason said, is to bring Israel closest to the international global standard, and will protect the investors. Yeah, I think it's a great idea.
Right. So we heard all about the new and exciting things that will happen in the near future, and we will hear later today from the other speakers about the different investment opportunities in Israel. Despite all the wonderful things and the non-disputable agreement that Israel is a great investment, there is still lack of visibility of Israeli companies in the global equity indexes by global investors. I feel, and soon we will hear if the other members of the panel will agree with me, that this year something happened, which changed forever the way global investors and even local Israeli investors view Israeli companies and the definition of Israeli company. In one word, Mobileye. In 2 words, Mobileye Intel. It seemed to me that this transaction was the wake-up call for all the investors, global and local. The Intel-Mobileye transaction is the watershed for the Israeli companies non-listed on TASE. The Israeli investors began to realize that what BlueStar had been saying for years, it doesn't matter where the company is listed. Mobileye is an Israeli company. The headlines in the Israeli press were filled with compliments, and it was clear to everyone that this is ours. When the party ended, the Israeli investors looked at their portfolio, and for their surprise, they discovered no Mobileye in my portfolio. I'm not gaining any profit from this wonderful transaction between a global company and an Israeli company. The Minister of Finance didn't wait long before inviting to his office all the managers of the Israeli institutional investors and asking for answers. How can it be? Are you not investing in the Israeli high-tech companies? They were silent in the room because they had no good answer for him. And now we feel the wind of change. Institutional investors in Israel are seriously looking into changing their benchmarks while adopting a larger view of what is Israeli company, and we are being approached since BlueStar is known to have data and solid proven methodology for defining Israeli companies. So Rob, do you see any change in the way investors perceive Israeli companies which are listed outside of Israel?
Yeah, absolutely. I mean, one really only needs to look at the depth and diversity of Mobileye's institutional shareholder base from the US to understand how big the reach of Mobileye was. And after the acquisition, I think investors in the US realized that this was not only a mobile tech investment, but this is an Israeli investment. And I think from there, it definitely shifted perception for other Israeli companies that's had a meaningful and visible impact to the companies that I work with, who have seen increased interest from institutions in the US that a year or two ago, despite fitting a profile that they typically invest in from a fundamental standpoint, were being ignored because they were from Israel. And I think that is changing. And I don't think it's an overnight change, and I think it's going to take time, but these are definitely positive steps forwards that we're seeing.
Right. Alon, what role can the Jewish federations and other institutional investors play in raising the visibility of Israel capital market?
A big role, just because of our outreach and exposure that we have. In our system, I think we're managing about, including private foundations, about, maybe, Michael, you can correct me if I'm wrong, about 60 billion or something like that, which is a lot of money. All of us work with different type of consulting firms. They work with their own institutions. So it was very, the outreach is very big. Actually, the other day, I had a conversation with a consultant. I don't work with them, I just spoke to her out of Cambridge, which is probably the largest consulting firm in the country. And we were talking about social investing and things like that, and she mentioned that they're looking at BlueStar because it's a great benchmark for the Israeli markets. And I told her, how did you get to BlueStar? So they got to BlueStar through a Perio that started working with BlueStar, and that because they have a lot of clients there, so just because someone uses the product and we have that access to all these large investors, it's very helpful. The visibility is higher. The problem is that it takes us very long time to adopt as federations to adopt the concept, because some of them think of it still as a social investment, which is completely not. And the education process is very long and it's very hard. But we see the traction. It's getting better and better. If we'll have better returns, if it's going to draw some more investors into that market. But it's growing.
Great, it's good to hear. So Shay, IDB is an Israeli bank located here in New York City. Do you see a change in the way your clients seek to invest in Israel during the last year?
I cannot yet speak on behalf of the bank, of IDB Bank, since I've been working here. Maybe Tzachi can, my colleague, but I've been working in the bank only for 2 months. But what I can say about in general, about the international money, international clients from the US and around the world, because you can see like a major inflows from China, for instance, right? A lot of money and some big acquisition that were made by Chinese companies. So I think that what we discussed, like there is a lot of effort that is being made by the government, by some agencies, the private sector, some Jewish endowments and federation as well. And I think they have made the Israeli investment or capital markets more friendly for international investors. BlueStars, of course, as well, as Alon even mentioned, but I can trust Steven because he's everywhere usually. Now I can get my free breakfast, right? I'm not paying for it, okay? So I think, but what all discussed, like the changing the ETN to ETF, about entering the global bond indexes, as even Jason mentioned, the OECD, the government is promoting a tax reform in order to encourage R&D centers to move into Israel and lowering the tax for high-tech companies. There is all the trend of American companies, real estate companies also issuing debt in Israel. As I mentioned the liquidity, excess liquidity from institutional money. 2016 was a record year in terms of like international VC investing money in Israel. So a lot of these Israeli capital market has become more global, friendly to investors. So I think generally it's now much easier to invest in Israel than it was like, I don't know, 10 years ago, 5 years ago or something.
Yeah. I'll just, if I can add, since I started in this business, I haven't seen, it hasn't been so hard investing money ever. It's very difficult. It's very difficult. Markets are not cheap, a lot of issues. If it's Europe, here in the US, Israel is just, there's no-brainer. It's just, there's a lot of stuff that's going on there. You just have to go deeper and look and understand the type of products that you have and the type of opportunities that you have, and you can just go do that. And I have a lot of colleagues, other CIOs, that are looking at these different emerging markets because they think they can allocate some capital into it. They're not even looking at Israel. So it's just raising the visibility. There are opportunities there. It's just that twist that they have to, maybe a kick or something, but they need that change their thought.
You're right.
So Jason, are there any new things that you can perhaps tell us about, on top of what was already mentioned, that the Israeli government is doing in order to ensure that the Israeli public will invest in companies listed outside of Israel, not necessarily from the high-tech sector?
Sure. So I'll mention something that hasn't been mentioned yet that's, I think, maybe a little bit underappreciated for Israeli companies that are not located within Israel. Obviously, we do a lot to bring companies to Israel, but the Israeli companies that are located here in the US or elsewhere, not from my ministry, but from the Ministry of Economy and Industry. We heard the minister speak earlier. They do a lot of work with these companies to help develop them, to help them get clientele and get capital and make connections. So if you're an Israeli company located here, you have government support, you have someone helping you to develop, and that's, I think, pretty unique. And I guess I would say that this is, I guess we're getting the wrap-up slide. I would say that this is sort of an underappreciated aspect, and when you look at the fact that there's 300 Israeli startups here in New York, something like 250 in Boston, hundreds more on the West Coast and everywhere in between, success, I think, really speaks for itself. And it's important that the government doesn't get too involved with these companies. We don't want to stifle innovation or make them follow a certain set of rules that we set for them, but we want to be supportive of them. We want to help them financially, and we want to help them one-on-one to develop as well.
Thank you. So if there are questions from the audience, I'll be happy. Yes, in the back. Mr. Schoenfeld.
I want to stimulate more debate between Shay and Alon on the issue of the high-tech funds, and also, even as you were discussing it, there were some questions back here, so maybe it's a little more color on the funds. We don't know when they're going to launch, but Alon, your concerns, especially given the checkered history of closed-end funds in the U.S., I believe is very, very valid. But I also want to encourage the optimism that Shay mentioned, because it's not just the specific success of those four funds, which, as Tzlill mentioned, minimum 400 billion shekels, which means minimum 1.6 billion will be allocated. But it's the signal, it's the message it sends, not just to Keren-Blum and Moderator, but to Shmulek at Kaplan Insurance Company and to the others that you need to get involved. So with that little satsao, with that little hand grenade, please discuss.
I agree about the effect, but I think the effect should have done, this step should have taken place a long time ago and not through the public markets. Institutional investors in Israel are managing pension plans, they're managing the money of the people, right, or the citizens. So you can make them invest a portion of that money into startups, and that's how they'll enjoy it. When you go to invest in startups, it's very, very difficult. The success ratio is very low. And that's why you have companies like, if it's either Petango or Viola or any other VC, that they're dedicated for that. They use all their resources, their connections, their capital, of course, in order to help those companies grow. This product that is going to be managing 60%, there's the majority of it in liquid markets, and the rest is just in a private capital. They have to sit on the board. They have to help them with so many things, the startups. I don't see why startups will want to work with them. And forget about the whole trading issue where that could actually hurt companies and hurt investors. But I do agree that the people who invest their pension money in Israel should enjoy. They're enjoying it, not directly through maybe if hopefully they will lower taxes through the money they get from all the exits, they'll be able to do that. But they should enjoy it, but let the professionals manage that. Trading into, some companies actually, to liquidity might hurt them. That's my concern.
I would like to add for what you said. It's just to let you know that there were 5 companies which applied for the fund, but only 4 will be launched eventually. And all the investment houses in Israel, which already are used to manage a mutual fund, they cooperate with VC managers. So they will be in charge on the professional side and advice, and they will make the decision which of the 30% will be invested in which startups. So it won't be the mutual fund managers will make the decision, which I think will make a better, hopefully, return to the unit holders. But I agree with what you said, that this is dangerous, but And I'm not sure if the 50 million guarantee is enough, to really lower the risk in VC. But I think this is the starting point. And at least it becomes aware that the Ministry of Finance are doing something and that they understand the need that the Israeli public, whether it's institutional investor or private investor, will start to invest in the high-tech sector, which is, I think, the best sector in the Israeli economy. So, I agree.
I don't want to argue too much with Alon since I want him to invite me to Miami. But I do think that, first, I agree with you. It's a challenge and it's a challenging thing to do for the government. But I do think that the attention was, and I'm not that familiar with the structure because as you said, they're going to work with VCs, and I probably, as part of the requirements, the fund manager has to have like a certain amount of experience or whatever. So I believe, or I hope, this is the way they've done it. But I do think that the attention was to attract institutional money. The fact is that Israeli institutional investors, they don't invest enough in the Israeli high-tech. And this is like, it's irrational. Like, this is one of the best in high-tech industries in the world, probably, right? Mm-hmm. And like, you don't invest your money. Something is wrong with the system. So I don't know if this is the way, or this is one of the, the right method, way to take care of it. But this is, as you said, it's the beginning. And in order to attract institutional money, I think it's really important for them to be exposed to the local high-tech scene industry, to the grown-up companies, to startups, everything, just be part of it. The Israeli institutional, for many, many years, have been very, very conservative, investing only in the local markets, mm-hmm. and then it became like too small for them. Now, between 40 to 50% of their portfolio is invested abroad, mostly in the US and Europe, right? So it's good for them to be exposed and expose their clients. And let's think of it. It's nothing. 400 million shekels or even 2-3 billion shekels, it's nothing. The Israeli capital markets industry manage close to 3 trillion shekels. This is not a major exposure. This is not a systematic risk. This is nothing, basically. Only like some, just for them to taste the high-tech scene, to be part of it, to invest in it, to give some credit to companies, not to be dependent only on banks, etc.
Mm-hmm. Yeah, over there.
I don't know how the structure of the fund is going to work, the governance. That's to be determined. From the standpoint of the institutional or retail investor outside of Israel, I think it's an excellent idea. However, it should not be marketed as startups, but as private companies. And the reason is that with access to capital these days, companies are going public far later on in their iteration. And so it's important to have access to these private companies, but it should be marketed not as startups necessarily, but as private companies in Israel that are more mature in their iteration. But I think it's an excellent idea, and the governance will be worked out, I'm sure. I'm sure there'll be problems, I'm sure there'll be benefits, but it is because of access to capital in the private markets is so easy. These companies are not going public early, and therefore investors are not getting a chance to invest in them in their growth phase, and that's why it's important.
Thank you. So thank you, members of the panel. And I would like now to introduce Josh Kaplan, Director of Research in BlueStar, and Eric Stanley, Research Analyst at Tzlill. We're going to talk about the importance of properly defining the Israeli high-tech investment universe.
Thank you.